give you the markets update now. The local exchange expected to contend with mixed global markets in line with what happened on Wall Street overnight. Investors remain unsure about global economic growth and what central banks will do next. Jimmy Moyaha is independent markets analyst, joining us now for a quick update on the trends at the JSE. Jimmy, good morning to you, and your quick overview of how the markets are faring in early trade after closing slightly weaker on Tuesday, reversing the session's earlier gains.
Good morning to our viewers. Markets opened softer this morning. We have largely expected the loss of momentum, just largely off the back of the Chinese markets being closed for the Lunar New Year. We know that Tencent is still not trading today. We're expecting it to be trading tomorrow. So that's filtering through into what we've seen, or what we saw last week in terms of movements coming from Tencent and Process. On the other side of things, the rest of the markets as well, we've got our financial stocks sort of sitting flat. We've got our industrial stock sitting just in the red. But again, a lot of the sentiment at the moment is tracking global sentiment around the fact that, as you mentioned earlier, demand concerns are still very prevalent, and we have increasing recessionary concerns as inflation seems to be something that all central banks are trying to keep under control, some struggling more than others. And that too includes South Africa's own central bank looking to have our own interest rate adjustment happening tomorrow.
Well, you speak about those interest rates. All eyes will be on the Reserve Bank's Monetary Policy Committee, who are scheduled to deliver the decision on the interest rates tomorrow. Do you think the cooling inflation on our shores will help with sentiment somewhat there?
Unlikely. We've heard from the Reserve Bank governor that there is still room for increasing interest rates even more. They are looking to make sure that inflation comes back between their targeted 3 to 6% range as per their mandate. And the expectation at the moment widely is that we'll see a 50 basis points increase in interest rates, which will put the repo rate at about 7.5% and the prime rate to consumers at about 11%. So the expectation there is that we'll see another rate hike, even though we are hoping to avoid that. But again, with the Reserve Bank's mandate at this stage, and given that the rand against the dollar is still sitting above 17 rand, it's sitting above 18 rand against the euro, and it's sitting above 21 rand against the pound. So from a currency perspective, the other mandate that the central bank does have is to ensure the currency valuation or the protection of the value of the rand. And at this stage, that coupled with our inflation expectations and where inflation has been sitting doesn't look very good for the chances of not having a rate hike or the chances of a rate decrease. A rate decrease is certainly almost entirely out of the question. It's whether we get a 25 basis point hike or a 50 basis point hike is what we're looking at the moment, and all signs point to a 50 basis point hike.
Let's quickly touch on company news. Astral Foods has published a voluntary trading update this morning. Talk us through that performance.
Yes, Astral published some of their expected numbers for the first quarter of 2023, saying that conditions were worsened. Arguably, one of the biggest factors that they mentioned was load shedding, and they said that there was other contributing factors like higher input costs on the feed side of things. But the load shedding factor has been a significant cost to them because it's had them or forced them rather to increase their expenditure to ensure that feedlots are maintained properly and to ensure that they are able to actually get through, because they've lost production. They lost about 12 million. I think it was somewhere in the region of 12 million in terms of their placement production on their broiler placements as a result of the load shedding impacts on their poultry business. So that's not necessarily the best start for them to the new year, or the new financial year rather. They did have about 737 million of capex that was earmarked for capital expenditure, and that has since been put on hold amid this load shedding concern. They're looking to see if they can implement measures to reduce the impact of load shedding, finding alternative energy and that sort of thing from their perspective is the likely solution there. And off the back of those numbers, they've just said that they didn't start the year off the way they planned to, and they're looking to mitigate the impact of certain factors going into the rest of their financial year.
Let's then talk about ArcelorMittal South Africa, saying its full-year headline profit is expected to slump by almost 2/3. What's driving that slump?
So ArcelorMittal said that the price of steel has come down considerably, but alongside that, they've said that input costs as well on their side have gone up. The increase in the price of coal as well has had a detrimental effect on their business. The movement as well of their ability to get steel exported and ability to get steel delivered by road trucks has decreased as a result of the fact that the trucks are now taking on alternative loads in the coal space and where else they are getting better revenues and that sort of thing. But overall, I mean, if you look at the second half of the year results, they were considerably disappointing relative to their first half of year results. They've outlined as well that earnings per share expected to be down anywhere between 58 and 63%, and headline earnings per share are expected to be down anywhere between 60 and 65%. There was an update, obviously, as well from ArcelorMittal around their decarbonization roadmap and their decarbonization plans. But overall, the markets didn't receive their operational update very well. The stock was down about 11.5% yesterday. And this is off the back of the fact that it finished the year down some 40-odd%. So not a very positive update from ArcelorMittal, and hoping that when the numbers are actually released on the 9th of February, that there might be some indication of how they're going to improve the situation in the new financial year.
Let's conclude the conversation with the health and beauty retailer Clicks, which has reported increased sales and market share despite a drop in income from COVID-19 vaccinations. Help us make sense of their numbers.
Yeah, so Clicks, as you mentioned, did see some positivity, but if you look at the significant drop in their revenue from the vaccinations, I mean, if we look at the prior year's reporting period, they made about 685 million rand from vaccinations, and this last reporting period was about 4 million rand. So very stark contrast in terms of numbers there. Obviously, the expectation there was largely expected with the return to normality in South Africa and sort of the relaxation of COVID laws and that sort of thing. So we did expect that the number of vaccinations wouldn't look anywhere near what it looked like in the COVID period. They did announce, of course, though positively, that the impact that they saw from Black Friday, or the positive impact rather, from Black Friday and Christmas shopping trends sort of indicated that consumers in South Africa were returning to pre-COVID trends, and there was sort of a normalization of trend of shopping patterns and that sort of thing, rather than what we saw happen during COVID. There was an impact on the top line as well. I mean, if you look at group turnover numbers as well, the group turnover figure was only up about 2.9%, including the impact of that vaccination number that I mentioned earlier. If you exclude that impact, the group revenue numbers look a little better. They were up about 7.8% from that perspective. To date, Clicks announced that they've administered about 38 million vaccinations. So significant impact of not having as many vaccines being administered at this stage on their revenue numbers. But hopefully going forward, their other business, or the return to normality in terms of patterns and that they're seeing from consumers, will have a positive impact on their business going forward.
Jimmy Moyaha is independent markets analyst. Thank you very much for putting us in picture there on the JSE in early trade.